The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, we go into the breach, dear friends. And kind of an interesting day out today. I am making a supposition that there is something different going on here today. And we're going to start talking about that pretty much right off. We're down at 9 points in the S&P cash. I put some charts in the morning newsletter to show that I suspect that we're not going to be moving a great deal over the next week. In fact, we may, between now and next Wednesday, may have a very range-bound market. I think there are some specific stocks that are going to move. We've been talking about this theme for the last week and a half, and that is be very careful of stocks that have very high short interest rates. And actually, we added one to my long-term newsletter yesterday, and it had a big bounce yesterday and today. A nice move anyway. I think that there's a great deal more. But it is just what happens when volume starts to shrink. Now, we had a lot of people probably predicting the end of the world this morning. And to me, it's kind of funny because everything that I see says that we are going to have more and more narrow trading ranges, at least through the Fed announcement. And so I'm looking at options this morning, and then there was a gentleman in the den that is one of my subscribers, and we were kind of passing things back and forth. And I think there was somebody else that I said the same thing to. But it looked to me by probably 10 or 10:30 that what I normally talk on my show about every month, which is the day that option market makers go delta neutral, sometimes that day is moved back and forth because of conditions. Sometimes if there's a day that is a vacation day and the markets are not open, they'll go ahead and move that back, and option market makers actually go delta neutral on Tuesday, or sometimes even as early as Monday, the week before expiration. So today I start seeing action that makes me think that a lot of people in the option market maker business are starting to go delta neutral already. I see the market being pushed down, and as far as I can tell, volume was okay, but at those low points, if you looked at the volume over 30 minutes or an hour, it was way too low to see a blowout to the downside. As we start the show today, we've got 2.5 billion shares on the New York Consolidated Tape, so a little bit better than days past. But we've gone back to this pattern of this hour being rather light. But I mean, we're down 8 points in the S&P cash. In the scheme of things, that is nothing more than a mosquito hitting a windshield. It's not going to make any big change to the car, to the speed, to anything else. It is random noise only. I guess if you're playing the 10-minute charts, it's not random noise because, of course, you're trying to make, as I like to say, grasping for dollars in front of a steamroller. And I did that for many years. I just found it a lot easier to sit back and make less trades and more money. Not everybody is suited the same way, so I know that there are many ways to skin a cat in the stock market. I found one that suits myself a lot better and made me a happier person. And in that is not the desire to always be right. And I'm going to change that to I know I'm going to be wrong a lot, to when I'm right, I've got to make a ton of money when I'm right. And so I look for incredibly asymmetric bets. And a lot of times people go, well, that 50% success rate is not enough for me. I've got to be 70% right. Well, the problem is that that gives up one important statistical inference, and that is when you're right, how much are you right? To tell you the truth, if I could find a market where I could be right 1 times out of 10, but that one time I was right, I got paid 100 times what I bet, I'd be glad to be wrong 9 out of 10 times. And that is where the fallacy of the stock market falls for a great deal, because they play it just the other way. That is, they're right 9 times out of 10, but that 10th time that they're wrong is just the opposite, and they lose 100 times what they bet, and that is the opposite side of that coin. If you're a baseball player and you expect to be right more than you're wrong, you're going to be severely disappointed, and the stock market is a lot more like baseball than it is football. You're not going to win 15 or 16 games a year. And anybody that tells you that they are would be a statistical anomaly. And of course, it's easy to hear people say that. But generally, what you find out, the reality is much more like the gentleman from New York, what was his name? I keep forgetting his name. That said he had made $60 billion, but of course had made none. And now he's in jail for the rest of his life. Probably somebody in the den. Oh, I don't know why I keep forgetting his name, but I do. Bernie Madoff, yeah. And of course, the opposite side is, people came in and said, there's absolutely no way he's doing this. Statistically, he couldn't be, right? And of course, everybody scratched their head. And probably a good thing that I like statistics, because so many other people shun them, that they can prove you right or wrong a lot more than other things. But they came in and said it's the equivalent of a baseball player hitting 950 every year. Well, we know no ball players hit 950. I think, what was it? Ted Williams was over 400, and that's been, 50 years ago or something? There may have been more people, but I think you get the drift. They don't even hit 500. And that's where you have to be very right and not really get into the idea that, okay. In fact, I saw it in my mail again, which is this horrible belief that options, because they're 80% of them go unused, that they are worthless, or 85%, depending on who you listen to. Again, if I could make 100 times on that 15% when they were right, I'd be more than glad to play options. The idea, though, is that somebody wants to always go all in. And as they say in pilots, there are old pilots and there are bold pilots, but there aren't many old, bold pilots. You never want to put that bullet in the chamber if you're playing Russian roulette. And unfortunately, many traders do, and why most of them don't last very long in this business. But just some random thoughts. I've got more. I actually have been doing a lot of thinking this morning, sitting on some trades that I think are going to do well for me. The problem with a lot of trades is you just don't give them enough time. You continue to think that everything points to the direction, and then you get tired, or you get bored, or you get distracted. And before I did that today, I decided to go out shopping and eating lunch. So I came back, and of course, everything is just fine. And in these days, I can just get my phone out and listen to TFNN, or actually get my quotes and not have to worry about it. Maybe I have to race back every once in a while, but it is kind of nice that I'm not stuck in front of a computer. But on this day, let's just think about it a little bit.
That it's all just a little bit of history repeating.
It is history repeating, and of course, people are doomed to follow their predecessors, because most people do not know their history. There's nothing new on Wall Street that I've found over the years. Everything changes a little bit, but it's not really different. The theme's the same. It's kind of like Jaws was actually another book about a great white whale. The names were just changed to protect the innocent and Captain Queeg from the beginning. On this day in 1999, Standard & Poor's adds Yahoo to the Standard & Poor's 500 stock composite index. The stock hits $576, not adjusted for splits later, up $139 or 32% in a single week, and 63% since the S&P announced that Yahoo would be added to the index. That's when they had an exclamation mark behind them. I don't know if they do or not. I see it both ways still. Maybe it's supposed to, maybe it's not. But of course, it came back with the height of the .com bubble. And yeah, it's never really been the same. It was called the portal of its time, but interesting. Of course, we've got people still out breaking the law, and kind of interesting to see people still getting away with it. And of course, kind of bad to have a name like Malik or Malik on a day like the last week. He was sentenced yesterday to fraud, and the SEC alleged that he, I guess, since he got convicted, was made up an employee, and just the time that this happens over and over and over again. We were talking about the guy that I can't ever remember his name for more than about 5 seconds. And everybody's already posted in the den. Too long. I don't know why I can't keep his name in my head. Maybe I'm trying to forget it. Bernie Madoff. Anyway, where are we at? Anyway, the New York Attorney General said that he had never more than $90,000 in his brokerage account, spent much of what he raised on hotels, plane tickets, meals, karaoke bar, and other personal items. Boy, I tell you what, every week you see one of these guys out there, I would be extremely reticent to give my cash away to somebody else. But people continue to do it every way. Anyway, probably the most interesting thing is he alleged that he was dead and therefore couldn't be prosecuted. And basically said the guy died of a heart attack. But that didn't fool the Attorney General, and they went after him anyway. But we continue to see these. Just a note, which I thought was just ironic. We're going to get into stock market when I come back. The largest destroyer for the Navy, the U.S. Navy, actually headed out to sea for the first time. Ironically, the captain's name is Captain Kirk. I would love to be on that to say, Captain Kirk to the bridge. Anyway, it's a new space age destroyer. Pretty neat. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As always, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can post a message in the den if you would like. As Andy Hecht is. Of course, he'll be on later on TFNN. We were talking earlier in the day around noon, and he made me think of something I hadn't thought about in a while. So I sent him this chart and said that it would probably make a good article. And maybe he will, maybe he won't on it. But the reason I was thinking about this chart so much was because I'd been probably 10 emails in the last 2 days asking me if there's a low in crude, which makes me think that there is no low in crude when I get that much email about any one thing. But my thoughts are, at what point in a market can you start buying bottoms? And I thought this chart is very good because a lot of people continue to always think that whether it's crude or gold or anything else, that there's always going to be a reaction, that there isn't an end to every market. And I could be wrong. But again, going back to the asymmetrical risk reward, I've got to have some pretty good evidence that maybe something like crude has hit a bottom. And so far, I don't see anything. I see far too much interest. And I think we're kind of in the capitulation phase of the market. But there's one more, according to this chart from oh boy, I think I've got the link. If anybody wants the full article, I'll be glad to send it to him. I just can't remember his name. He's French, and wrote this, basically spent a lot of time looking at markets and the different part of the markets. Doesn't tell you exactly where you're at, but it's a good model and a way to think about different cycles in the market. But I was thinking as I was talking to Andy, and I couldn't really remember it until I got back to my orifice here, about what happens and why people are always looking kind of in the rearview mirror at markets instead of probably what will be the next big market in front of them. And we were talking about some other things in world politics, back to World War II, and how some of the other things were moving. And it really kind of hit me. And that was how France decided to prosecute the beginning of the Second World War. And all the generals, pretty much, their battle plans were no different than World War I. And they got smoked in a big way. What did it take, 2 or 3 weeks to get to Paris? Probably would have taken them 1 week just to ship all the stuff there, much less in the middle of a war with bombs falling and people shooting at you. But the reason why is, of course, they were out there with ox carts moving stuff around, why the Germans had built high-speed tanks. And I guess the idea or the desire to always believe things are not going to change is pretty big. And I guess the question is, how long can we stay in a mode of capitulation and despair in something like crude? The answer is a long time. Gold, before it took off, had a 10, 12-year hiatus of doing anything. Could we have the same thing in crude? The answer is yes. The thing is that I don't know. It ends up being one of these things where I continually think that maybe there's something better than crude. Maybe there's something better than gold out there if you want to have the next big bull market in something. And maybe we spend a lot or too much time looking at things like crude, thinking that this thing has to bounce. I mean, it could bounce any minute. It could bounce $10 any minute. The reason it's going to bounce is not probably supply and demand, but probably political, a war, somebody cutting off some supply and demand, not natural features in a market. Normally, you don't have those kind of things in a lot of equities. You just have a lot of despair. Go sideways for a while. But I don't know. Interesting chart. Everybody should think about it. Nothing goes to the moon, and generally nothing goes to zero all the time without at least a few bounces along the way. But if I was thinking of where crude is now, I think we're still in capitulation. I don't see a lot of despair yet, especially too many people calling, too many people emailing. Much like gold, I've said I want everybody to shut up about it for a while. And at that point, maybe we can find a bottom. I just, too many people with little magnifying glasses out like Sherlock Holmes looking for that bottom. I want everybody to forget about it. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Markets around the world were universally lower, with the FTSE off 1.3%. Germany off 2%, France was off 1.6%, Spain was off 2%, Portugal 1.7%, Italy 2.3%, Irish 1.3%, and Greece, the model for Chicago and other great places in America, 4.4%. What can we say out here about that other than the market's actually handling it fairly decently so far? Of course, the one thing that everybody wants to talk about is whether or not a market pulled back orderly or not, or if everybody just panicked. Normally a panic just means that it burns itself out much quicker. The worst part of a market is one that goes down 5 points every day in the S&P, and those things can last for months and months and months. You get into those kind of things. Same thing on the upside. Never let you in, never let you out. But it's hard for me to see anything other than the action that we have today as being an issue with options and just option market makers going delta neutral a little bit early because, of course, we got what is it? It is next Wednesday, the 16th. We go into the Fed announcement. It's Tuesdays and Thursday next week. So we can look at probably real light volume starting on on Monday the 14th. lighter volume on the 14th, light volume on the 15th, vapor on the 16th. So next week, as we get into that, it's going to be very, very light. And unless we have some kind of route going into it, my guess is that we're going to see shorts end up covering in the last 2 days, Thursday and Friday of that week, going into it. Now, I don't think it's going to be that much higher, but I do think that a lot of people that were hoping for a route into the end of the year are going to be sitting on big short positions with little to show for them and declining volume. That is where you have these massive moves during the day where they don't last long, 1 or 2 days sometimes. But you can see 10, 20% moves in stocks on nothing but short covering in light volume as we go into times when you probably should not be short. Now, if you are short, you probably got maybe till Friday out here to really get the cash that you want out of the market. Maybe the Fed does do something, and maybe you get it on the 17th. But there's all the charts I'm looking at. There just isn't a lot to show out here that says that anything other than we've hit our highs, but that doesn't mean that the market rolls over instantly. I wanted to follow up on some charts that we looked at lately. One of them is Autodesk. The February 27th high at 65 bucks, 5.3 million shares. We're into it with 1.9 million shares on the 4th of December. Had kind of a move back yesterday, but no volume in it. Opened a little lower, actually higher than the yesterday's close out here, but volume is not extensive. 9 million shares, or 900,000 shares, excuse me. And again, we continue to see market volumes in the indexes far in advance of what we're or should be seeing in the charts themselves. Other stocks that look like maybe they've topped out but haven't really done a lot to say the show is over is Avago Technology, of course, a major supplier to Apple. When we look at this, it's the June 1st that we're going after in this stock, $150.50, 11 million shares. Got into it with a little less than half of the volume on December 7th, a day that will live in infamy. But not a lot of action. In fact, not a lot of volume back here on the other side. Volume from the November 13th low was not all that light either. It's just, as we've been saying, there isn't a lot of volume at the top. There isn't a lot of volume at the bottom. And everybody, I think, wants to impart either the market's really going higher or going lower. I suspect it's going nowhere fast. Broadcom is another one of these, of course, similar market to Avago. Not the exact same customers, but Apple is one of their major customers. May 27th high, this thing saw a huge surprise in earnings. $57.70. It hit that day on 61 million shares. As we've been talking about the last couple of weeks, it's the bear in the porridge. My porridge too cold, too hot, just right. This one was way too hot, 61 million shares. Normally leads to an exhaustion move, which it did. Came back all the way down to the August 24th low at $45.30. Been moving its way back up. This is one where the energy has not been all that exciting from that October 6th low. As we get up to this high, everybody wants to buy a pullback. No one wants to buy the breakout. That May 27th high of 61 million shares being tested yesterday by just 16 million shares. My guess is that you can look kind of at Apple and between these two and start seeing what's going to happen. And I think we're looking at just slightly higher. Now, if you're looking for a good example of a asymmetrical triangle, probably no better place to look at it than Apple itself. Your low starts the triangle of August 24th. On the high side, you're looking at June 20th. If you just draw a big greater sign symbol out to that, and probably in the next 10 or 15 days, we're going to have a false breakout from Apple. It's been very good at following this asymmetrical triangle pattern. And I think what we're going to see is a breakout to the upside, maybe something like 125 as we go into the end of the year. and I think that could maybe even 127, something like that. I don't think it's going to be huge, and maybe it's 50 cents a day. But whatever we get out of this 125, I think it's going to break. It's going to hold up there for a little while, and it's going to do the same thing it did last time, which is fail. It's very tough to see the kind of business coming in at Apple that would continue to push it higher. It's about as good as it gets on smartphones. I don't think that they've got the market in China that everybody is talking about them having. And at some point, no matter how big you are, you pretty much get into a mature market. And I think smartphones are mature. We've seen that for a year in Samsung. It's probably coming to Apple, though, and I think probably right after the first of the year. Not everybody has to have the latest, greatest smartphone, although Apple would like you to see so. What is that? It's our job to catch falling knives. It must be a pin cushion. Somebody posted a message in the den. Anyway, if you'd like me to talk about a particular stock, you can email me at path@tfnn.com. You can call me at 877-927-6648, or you can post a message in the den. Beazer Homes, we talked about these looking like they topped out for a while. At least you may have a short respite out here in Beazer. It is finally testing this October 2nd low at $12.95 with 1.1 million shares with lighter volume today. We are getting into that with, 420,000 shares. Doesn't look like we're going to really break it. Of course, you had a push into those lower candles on November 10th with higher volume, so we knew that this thing was coming back. But looks be fairly light volume. Kind of have to like last 4 days out of lighter volume each day. But doesn't mean this thing is going to tremendously reverse its fortune in the next few days. Stocks that have interesting chart patterns that I'm looking at, we're back to Cablevision Systems. This thing actually had a huge day, a sign of strength. Would have liked the candle to have a little bit more intraday range. It did not. September 17th, 114 million shares. And of course, we're talking about Goldilocks, too cold, too hot, just right. Another day that was just too hot ended up being an exhaustion day. But that's always pretty nice because it comes back down to these lower levels. If you were going to be bullish on something, this is the kind of chart you're looking for. Gives you very decent risk reward. It should never close below this gap that was formed by that day. So you've got what, $28.50, $28.25, something like that. It may come back just a little bit more out here, or you may have a nice pierce and it closes back in. But that would probably put an end to the downside on that. eBay is another one of these charts that looks to me like it's going to be very open to trouble coming the first couple of weeks of next year. Right now, it's just kind of been going sideways. It's back up, tested some previous highs, but you don't like I said, not ready now. If you look at the last day, yesterday's down volume, 7 million shares. Today's down volume, 5 million shares. You might get into the same kind of volume out here today, but continues to look light to me for a lot of these. But I digress. And I haven't digressed in a while. I need to digress more. In fact, I may commit myself to digressing every show between now and when I leave for Christmas holidays. EPAM Systems, interesting high on October 7th, 810,000 shares. Another one where we're back into it with 50% of the volume today on this one. So let's say we get to 600,000 shares, still going to be 25% light on this one. Does that mean it can't, especially in these light volumes that we're looking for in the near future, continue higher? It can. What you want to look at is the short volume on these stocks at the highs. Again, this is the worst time to be short in a market where you're going to continue to see lighter and lighter volumes from now on. Probably excluding probably the 8 hours or 6 hours after the Fed announcement, which will probably have a lot of volume. And that will be the end of the volume probably for the year. Everything from then on is going to be light and variable. Don't expect big wins. I think everybody knows that they're going to raise rates, so you may have a little bit of volatility right after that, but I don't think there's a whole lot else happening. Harris Corporation, August 10th, 1.8 million shares. We've been talking about this one for a while. It's just kind of hanging up here on lighter volume. It did test at the 1.8 million shares of the previous high on August 10th with 1 million shares on December 4th. It's back into the trading range. Really didn't fall off that much. Today we've got another million shares, so maybe it gets 1.13. But again, not a lot of these charts look extremely bearish to me. Now on the downside, we've got some more charts. Minter Graphics may be trying to get some kind of low in there. Question in the den is how much of Amazon's business is cloud computing? And we'll get into that in just a minute. Minter Graphics. This one, of course, had a disastrous earnings cycle. But these are at least how short-term bottoms are made. You got to figure that maybe part of this gap down is going to get tested. What you do want to see is probably maybe another 5 or 7 days out here of low volume. Of course, you came into hot volume, almost 20 million shares on the 20th of November when this thing blew apart. Now you're just kind of going sideways. Normally, if you're looking to buy something that maybe, especially with a lot of people short this thing, maybe something that could get back up to 22 would still be a nice one. You want to see a few more days out here of sideways action with little or light volume. That would tell you that there's somebody out here nibbling on this thing every time it starts moving down a bit. And you've got a bidder underneath there. Right now, no real big signal to buy this thing, but I'll be watching it only for a very short-term trade. MSCI, another one up here with a very light volume. You want to take a look at this, but it's one of those ETF, MSCI ETFs. But less than half the previous volume of November 2nd, $71.21, 2.3 million shares with 800,000 shares on the 4th. And I could see why some people might be thinking about going short. Very tough for me to think that you're going to drag a lot of cash out of this market going into lighter volume. We're just off 9 points on the S&P cash now, 2.8 billion shares. Wanted to get to Amazon here, and let me look it up. But I think that the first quarter they started giving those numbers was last quarter on Amazon. And I just wanted time to look it up during the break. So we'll get to that. Still have time to give me a call at 877-927-6648. I'm feeling lonely. Give me a call.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Had a very good question in the den from Peak D, and that was, what's Amazon making now on its cloud business? And from their last earnings announcement, which is the first time they've actually said their business was up 78% year over year. The income was $521 million just from their AWS service, which is their cloud services. Very interesting chart up here, but the core business still tends to be extremely weak. You know, now their Amazon Web Service, they're making 25% margins, but the margins are just 3% on the business of shipping things to you after you buy them. That's always been the bugaboo, I suspect, in that business. They've actually got it backwards, I think, in this article. The margins are pretty good. Yeah, I'm pretty sure they've got it backwards in this. Anyway, the growth numbers are also impressive. They grew 78% year over year. You know, it was $2.1 billion. They're making a lot of cash in that business. They didn't make 25% margins on selling stuff, I'll guarantee you, and mailing it to people. It's always been 6%. So I think those are actually reversed maybe in the article. Anyway, good business out here. What really bothers me is this chart pattern. And you've got three beautiful gap ups, and those patterns tend to get filled. And we've seen that in Chipotle. And I don't know if Chipotle, generally you can recover from one or two or three of these things. It's got the same problem, though, and that is that it's got three giant gaps below it. And I've done a lot of research, and they continually do get filled. So I would be watching for a lot of these companies. The question is whether or not Amazon can ever turn the spigot on full force, and whether everybody's just piled into this thing. What is it truly worth? And still becomes an issue. Other stocks of interest out here, Yum was kind of interesting to me. I still think that below all of what's going on in it, it has the same Chipotle problem. That is, it is just kind of in a business where they are known for their chicken E. coli problems in China. And of course, earnings really haven't come back. I think it was just too short for conditions. This has come back into the first time this thing tried to fill that huge gap down on the 7th of October. But the last time it was up at this level, October 20th, 15 million shares, $75.22. We got to 76.64. We got a little doji out here. The energy wasn't all that exciting up here. I think there are a few charts out here that look rather weak. Again, I think that these charts can continue up a little bit higher into the end of the year. And I would be encouraging people to think about shorting after the first of the year. We would need some kind of giant surprise, I suspect, from Janet Yellen to get this market headed down in a big way. And I just don't see it. If we can't sell the market off with all the horrible news we've got now, my guess is that everybody is waiting until next year to sell. And that's what I am kind of setting up for. Be very, very, very wary of stocks with high short interest as we go through the end of the year. In the meantime, sell when you can or cover if your stock has super high short interest. And we'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.